Hello, everyone. Welcome to the Ashworth Wealth Weekly Market Update. My name is Todd McChesney. Grateful to be able to speak with you this week on one or two quick ideas. Number one, this week's chart shows the global PMI Suppliers Delivery Times Index. That's the Purchasing Managers Index for suppliers. Many of you are aware that last week there was a conflict in the Middle East. There was a tragic attack on some U.S. troops. There's been some more threats on ships in the Red Sea. It's caused some volatility in oil prices, which negatively impacts some global maritime trade. Just in the past 2 months, traffic in the Suez Canal, which handled about probably 12 to 15% of global maritime trade in 2023, has been reduced by 42%, according to the United Nations. This is primarily delaying ships traveling between Europe and Asia, and some factors in Europe have even paused production as they wait for parts from Asia. So we're not just talking oil, we're also talking about other goods and services. As a general rule, when goods and services are slow to get where they need to be, that causes inflation. It has to do with a lot of why we had inflation the last few years. You can see from this chart in 2021, it peaked out at 65.3. You don't need to actually understand what 65.3 means, other than the fact that anytime it's over 50, that means that supply lines and things can take a little bit longer, and that can cause inflation. We've done really well for the last few several months, the last year or so, being able to get supply lines going faster. It's reduced inflation. When I say reduced inflation, I mean reduced the rate of inflation growth, etc. So that's kind of what's going on. The real question is what does this mean for us and our portfolios? If there's potentially more delays. Many times people try to overreact. They try to say, hey, this is what's going on. I'm going to try to get ahead of this and try to beat what's going on. As a general rule, when we see these kinds of things happen, there may be small service disruptions. You may have small hiccups in the market, but in the long run, staying fully invested, making sure you're taking advantage of all markets is the better way to go. We have story after story after story of people trying to beat the market by getting into cash or doing this or that, when in reality the globally diversified portfolio, staying true to your risk tolerance allowance and being able to move forward is the best way to make sure that you can impact your own portfolio with what's going on in the market. So with that, we'll let you go. Feel free to forward this to any friends or family members that may be interested in hearing these weekly market updates. If you want to put them on our weekly distribution list, you can let us know as well. Until then, we'll see you next week, and look forward to seeing many of you in our reviews coming up. Thank you.